It was an 80,000 Bitcoin whale. An OG hodler who had died and his heirs were the ones selling the 80,000 coins. We're just seeing these huge unlocks. I think we're going to just see more and more of those. The volatility is coming down over time, but now it's kind of more like this steady uptrend with consolidations, and the pain you pay is the patience. It still does mean very, very strong returns. Imagine if you could borrow anywhere from 0 to 10%, borrow fiat and buy Bitcoin, growing at 30% per year for 10 years.
For years, Bitcoin investors have lived by the halving cycle, that roughly every 4 years, Bitcoin's block subsidy halves, supply tightens, and the price rallies, eventually leading to a massive blow-off top and a deep bear market. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
We may have over-indexed on the 4-year cycle now in Bitcoin, right? We may think, oh yeah, it's always just going to do, this kind of 3 green, 1 red thing, right? Because a lot of us would come into this year thinking, oh yeah, this year's going to be a big one, and then maybe next year is going to be a down year. Now, I'm kind of turning my mind around a little bit on that. I'm not saying 100% for sure, but it seems that way. It seems a bit more like, as I'm sure you heard, people were saying when the gold ETFs came out, that gold had this kind of secular 8-year bull run. And yeah, there were some pullbacks on the way. Maybe Bitcoin is going to mirror that behavior a little bit more. And it's just kind of, everything is macro, So I think this kind of idea of the typical 2013, 2017, 2021 kind of big bull run and a big crash at the end, maybe that's actually what changes, and we have to just be flexible and understand that it's not always going to be exactly the same. We have to understand what are the conditions that have changed, right? And I would say it's fair to say the institutional environment is different this time around, right? We have large US Bitcoin ETFs that are responsible for a large amount of buying. We have all these Bitcoin treasury companies. Obviously, you're involved in one, and I think there's just such a big shift in the mindset. So many more people are seeing it as a savings tool. So I would say that's probably the main thing in terms of like Bitcoin macro per se, that I think maybe we're not likely to get a big 80% drawdown. Maybe it's like, who knows, 50%, only 50%. But I think we're just kind of in this broader uptrend. Of course, it depends whose view you take. Like, are we going to do this kind of big, crazy bull run at the very end of this year? But yeah, well, if I'm guessing, I think we're just going to keep doing this, kind of go up a bit and then chop solidate, right? And as you mentioned, right now as we speak, it's about $122,000 per Bitcoin. So, I could totally see us do this kind of, have another pump to call it 150-ish, and then do another round of consolidation. And we sort of just keep doing this kind of stair-stepping pattern up. And, maybe some people get annoyed because they wanted like 250 or 300K, and they were kind of expecting to get that. And then everyone wanted to sort of time the top and sell the top at 250 or 300K and rebuy the bottom at 100K or whatever, right? And it sounds like maybe we're not getting that. People aren't getting what they thought. Now it's kind of more like this steady uptrend with consolidations, and the pain you pay is the patience. You just have to wait through that consolidation period before the next leg up. It's fair to say it mattered more in the early years of Bitcoin, whereas what matters more now is more like an OG whale when his coins come available for sale. Like famously, as I'm sure you know, there was that story a couple months ago. I think it was an 80,000 Bitcoin whale. Now, the rumor or the speculation might be that it was maybe an OG hodler who had died and his heirs were the ones selling the 80,000 coins. Who knows? Although apparently Galaxy knows, because apparently those coins went to Galaxy. So anyway, but nevertheless, the fact is that we're just seeing these huge unlocks, like a huge crack of coins just hit the market. And I think we're going to just see more and more of those, right? Because there are going to be all these long-time hodlers who have been sitting on coins for a long time, and maybe they're not selling all of it, maybe they're peeling some of it, or in some cases they are taking out of the left pocket, putting it in the right pocket, and they are maybe seeding some treasury company with some coins, this kind of thing. So it's a mix of things, But some of these people are now having access to financial services and tools that they did not previously. And now they want to take their chance because, hey, now it's 120K or whatever. I think some of this for me, as I think I've mentioned this to you offline as well, that I'm a fan of power law. And I think that is an interesting way of analyzing where Bitcoin is going price-wise, that over time, we should expect to see a diminishing returns and diminishing volatility. Now, listeners, don't get upset. It still does mean very, very strong returns, but it just means maybe not as crazy as it was in those early years. And so I think part of that is just, the volatility is coming down over time. But to be fair, I think, we do come through these periods where maybe the volatility kind of calms down for a bit and then it just comes roaring back, once we have like a big run up again to, let's say if we had a big run to 140 or 150 right now, I bet you the volatility is coming back then. Would obviously, hey, I'm highly invested in Bitcoin. Of course, I'd love to see the acceleration in the in the returns of it. But I don't know. I don't want to be the pouring cold water on the, but I just kind of see it like the more likely case is this kind of diminishing or tapering down over time. And part of that is just we wish people would just come along for the ride earlier, right? Like I'm sure you and I and probably many of our friends, many of our listeners, we were trying to shout from the rooftops and get more people into Bitcoin, but not everybody listened. Right? They just weren't ready to follow us. And I think part of that is also this story with the treasury companies, right? We wish people would just go buy Bitcoin directly and hold it in their cold card, in their multi-sig, and whatever self-custody. But we know a lot of them won't. And so a lot of them choose to buy equity or some form of debt or some form of a tranche of Bitcoin exposure because they're just not ready to buy Bitcoin directly. So that 300 trillion, fixed income pie, or even the massive equities or property market or art, all these huge markets, there's just a lot of people who they've just kind of got their blinders on. They're stuck in their ways. They're not willing to sort of come fully to the Bitcoin realization yet. And so I think it's just offering them these little stepping stones, these little pathways or ways to kind of get exposed without really deeply going down the rabbit hole yet. Of course, we wish they would, but we understand they won't all do it straight away.
A key factor behind this evolution is the rise of U.S. Bitcoin ETFs and corporate treasury adoption. Institutions are no longer just watching Bitcoin from the sidelines. They're actively buying and holding it in large quantities.
I think part of it's cultural, and part of that is in the 2017 era, many of us were against all this shitcoin ICO stuff. And so it kind of, I understand where if you kind of squint, it can look like that in certain contexts, right? And maybe they are focusing their criticism on that they think, oh, look, there's a few insiders who got together, they made some, whatever. In their view, they would say, well, these insiders, they kind of got together, they seeded something with some coins, they got in on a cheap price, and now they're trying to dump on retail. That would be kind of a common argument for some of them. And maybe there's some element of that, just depends on which company you're looking at. Of course, not all treasury companies are the same. Not all are professional, competent, serious operations. But I think it's more than that. I think there's people, sometimes they're falling into an almost anti-capitalist mindset, right? Like ultimately,
yes,
most of us believe in free market capitalism. We believe in the freedom to fail, right? Sometimes that means that, companies, you try something and it doesn't always work out. And sometimes that's like, if you talk to any entrepreneur who's been in the game for a while, no entrepreneur is like batting 1,000 and hit success every single time. No, he had to take some knocks and falls on the way there, and so be it. Like I think some of us maybe have a higher tolerance for, let's say, business failures, whereas others would sort of prefer to, let's say, oh, I want to keep my hands clean. I don't want to be involved. I don't want to take a risk with something that could be wrong. I just want to tell people to buy Bitcoin self-custody. And of course, look, to be 100% clear, Mark and I both tell people, buy Bitcoin in self-custody.
Start there.
100%, you should start there. The treasury company play, at least the way I see it, is, maybe you want to, if you believe in a particular business treasury company that you think that they have a way to achieve BTC yield, and you believe in the business model, right? I think this is the other big fundamental point I would bring it back to, because instead of having the mental model of, oh, it's just insiders getting together and dumping on the retail, think of it like this. Is there a real business model here? I believe, yes, there is. And my answer to that would be, well, imagine if you could borrow anywhere from 0 to 10%, borrow fiat and buy Bitcoin, growing at, call it 30% per year for 10 years. Right? On the power law trajectory, it might be like 42 down to like 25, average it out, it's about 30%-ish, right? Clearly, if I can borrow at 10% and buy this thing growing at 30%, it's a no-brainer, right?
But
now,
everyone
yes,
can do that.
There are risks. Well, I mean, you're right that...
Everyone can do it.
Yeah, I mean...
Anyone could borrow against their Bitcoin at 10% and buy more Bitcoin.
I mean, to a level, yes. Yeah, I mean, maybe there's like certain levels of how much you should do that with. Like maybe it's only worthwhile doing a fraction of your stack, not all of it, obviously. And then maybe these treasury companies can access larger pools of capital and do it even cheaper. And so maybe that's really the game. And so, yeah, to me, it just comes down to, do you believe there is a fundamental business model, right? As opposed to it just being this kind of retail extractive phenomenon. This view is more like, oh, it's just MSTR, maybe Metaplanet, and there's not that many others that are interesting. Whereas my view is more like, well, think of it this way, right? Like if it just comes back to, if you can borrow at 10% or less and you can buy Bitcoin growing at 30%, okay, now, yes, there are risks. Of course, could the state seize your coins? Yes. Could the state try to regulate you, etc., etc., etc.? But I think there's enough margin in this that it's worthwhile as a business. Now, where I think some people, I guess, coming to your question, which is like, why are some people unable to see it? I think for them, it's maybe they are thinking of it too much like they think of it like it's just a Ponzi. It's just raising from new capital to pay older capital, and that's all there is to the game. But no, hold on. The other part of the game is you buy and hold Bitcoin, and Bitcoin is growing. Call a number 30% per year or 40% a year or whatever, something in that ballpark, I think is quite reasonable that it grows at over the next 10 years per year. So if you truly believe that, then what's the problem with borrowing at 8 or 10%? And, I think that's where I see maybe some people are a bit misguided, or maybe they don't truly believe enough in Bitcoin themselves, right? They think of it like somehow it's like an extractive model, and it's, they're coming back to, I think their minds are going back to that extractive model ICO mindset.
In 2017, many Bitcoiners united against the ICO mania, protecting Bitcoin's reputation from scams and vaporware. That purist mindset remains strong today, but it can also lead to resistance against legitimate innovation. Some Bitcoiners prefer a world of pure self-custody and nothing else. And while that's the ideal starting point, not everyone is ready for it. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.